I'm from AC 2205M. Today, my partner and I would like to present the Group Project 1 FAR 610. First of all, let us go through to the question of the day. Guys, have you done read the question? Okay, today we would like to present the question 1A, B, C, and question 2A.
Hi guys, today I would like to explain to you the appropriate accounting method to record the investment in Rindomi Berhad, Siasulu Berhad, and Beret Berhad. There are two types of accounting method to record the Rindomi Berhad, Siasulu Berhad, and Beret Berhad. And Siasulu Berhad is in July 2017. In acquisition method, Katana as the acquirer need to record the cost of the business combination, which is the consideration transferred, the assets, the liabilities of the acquirer. The next step is to recognize and measure the NCI. Katana Berhad should measure the fair value of the NCI of Rindomi Berhad and Siasulu Berhad by using the market price of RM2.50 and RM1.10 respectively. Lastly, we need to measure and recognize the goodwill and the bargain purchase that we received from the Rindomi Berhad and Siasulu Berhad. The goodwill that we received from the Rindomi Berhad should be disclosed in the statement of the financial position, while the bargain purchase that we received from the Siasulu Berhad should be disclosed in the statement of profit or loss. But if the bargain purchase that we received from the Siasulu Berhad are from the past year, we need to disclose in the statement of changes in equity. Next, Beret Berhad should be recorded by using equity method. This is because Katana Berhad only acquire 40% ordinary share of Beret Berhad, which is considered as Beret Berhad is their associate. Katana Berhad should record their investment in associate initially at cost of RM25 million. Katana Berhad should record their investment in associate initially at cost of RM25 million.
Question 2B, schedule. The first item in the schedule is investment in NCI of ordinary share. First, the Rindomi. This amount can be get from the previously calculation of goodwill. The Rindomi, the amount is 1250 million and Siasulu 396 million. Return profit of Katana parent. First item is balance carried down 2 million. For the adjustment, Katana have the URP inventory negative 37.5. This can be get from the additional information number 1. Next is ordinary share dividend payable. This can be get from the additional information number 5. The ordinary share dividend payable is negative 360. Ordinary share dividend receivable is 120. The next item is interest on debenture. For this, we can get the information from the additional information number 6. Interest on debenture payable is negative 128. Interest on debenture receivable is 20. This amount is calculated at the percentage of 31.25% because the rest is the interco between the Katana and the Rindomi. Then the total return profit of Katana is 1614.5 million. So we minus with the impairment losses arise from the Rindomi 195 multiple with 75%, we get 146.25, and the rest we put under NCI negative 48.75. The next item is bargain purchase that arise from sia-sia-lu. We get 1080 put under the group return profit. And the last item is the share of profit of Perak, 18.75, which the URP and the bargain purchase of the associate. Next is the return profit of Indomie. The first item is the balance CD 1500 million minus with the pre-acquisition profit 220 million, and we get the post-acquisition profit 1280 million. For the adjustment, the first adjustment is URP, gain on disposal. This can be get from the additional information number 2, which Indomie sold a plant to Katana at the profit of 4 million. Then, it gives a over-provided depreciation, which 4 million times with 20%, which we time with 20% because it is the accounting policy of the company to calculate the cost of the plant and equipment at 20% on cost per annum. Next is the over-provided depreciation, which arises from the lower fair value of the equipment 70 million at the date of acquisition. The amount is 56 million. Next is the ordinary share dividend payable, negative 160, and the interest on debenture 64 million. So, the total profit of Indomie is 1108.8. Then, we apportion it to the group return profit, 75%, which we get the 831.6 million, and to the NCI, 25%, we get 277.2 million. Next is the return profit of sia-sia-lu. The balance CD of sia-sia-lu is 1000 million minus with the pre-acquisition profit 700 million. The post-acquisition profit is 300 million. And for sia-sia-lu, there is no adjustment. Then we apportion it to the group return profit, 80%, which will get the amount is 240 million, and for the NCI is 60 million. Next is the general reserve of Katana. The balance CD of Katana general reserve is 600 million, and the adjustment is the issuance of bonus share, which is 450 million. So we will get the balance CD of the Katana is 150 million. This will be put in the group general reserve. For sia-sia-lu, the balance CD general reserve is 160 minus with the post acquisition 160, so we get 0. Next is the general reserve of Indomie. The balance CD of the general reserve is 300 minus with the post acquisition 80 million, and minus with the adjustment of issuance of bonus share, we get 200. So the total is 20 million. This amount is apportioned into the group general reserve and NCI. Under group general reserve, we get 15 million, and under NCI, we get 5 million. Next is the capital reserve. This reserve is arise when Indomie has issued bonus share after the post acquisitions. Therefore, the 200 arise from the bonus issue is apportioned into the capital reserve. So we get 150, and the rest we put under NCI 50 to make sure that the goodwill will be the same. Asset revaluation reserve. For Katana, Katana have the balance CD of 1,500, and for Rindomi, they have a fair value gain on patent of 10 million. We apportion it by 75% under group ARR. The amount is 7.5, and under NCI 2.5 million.
I'm gonna present about our group project, question 2A. According to the standard MFRS 11 joint arrangement, stated two characteristics that must be exist for entities to be recognized as a joint arrangement. First condition is the entities must bound by the contractual agreement. A contractual agreement is about a written document as an evidence that they are joined to the contract arrangement. There are areas covered by the contractual arrangement, such as activity, duration, and reporting obligation of the joint arrangement. Second, appointment of board of directors. Third is duration during decision making process. All decision must agreed by all the entities. Fourth is capital and other distribution of the entities must be shared accordingly to the contractual agreement. Next, the second characteristic that must exist for the entities to be recognized as joint arrangement is the contractual agreement gives each party a joint control over the arrangement. Joint control is where the parties contractually agrees to share their share in control and decision making about a relevant activities of the joint arrangement. It must have joint control is where the parties contractually agrees to share and decision making about a relevant activities of the joint arrangement. It must have a concern. Each of the parties must have concern to share the control and decision making of the company of the arrangement. There could be a parties that does not have a joint control. These parties can only participate but does not have joint control over the arrangement. For example, there will be three parties, three entities, A, B, C. If A and B have a joint control, while C does not have joint control but only can participate. This means that A and B have a full have a joint control over the arrangement, which means they can make a decision or vote or something in the meeting, while C cannot make a decision, but C can attend to the meetings. That's all. The next question, which is 2B, I have to explain about the difference between two types of joint arrangement based on rights of assets. there is two types of joint arrangement, which is joint operation and joint venture. The definition of joint operation is the venture have a joint control over the arrangement, which means they can make a decision or vote or something in the meeting, while C cannot make a decision, but they second is joint venture. The definition of joint venture is two ventures involved in establishment of separate entity. For example, if there is two companies want to make a project, they can also be make a new company, different separate from the two makers or two operation, a different company to manage all the projects that they want to do. Okay. Second, based on the question, the difference between two type of joint arrangement, based on the rights of asset, in term of contractual arrangement for joint operation, they have rights to the asset and obligation of the arrangement, while the joint venture does have rights to only net asset of the separate entity, which means of the company, the net asset of the company, not the asset or obligation itself. Next, right of the asset, for joint operation, all the share of the venture interest in asset relating to the arrangement. This means that all the right venture, the entities can have the ownership of the rights. In other words, joint venture, the entity has no rights over the asset of arrangement because they have no title of property or ownership over the asset. So that's all for me. Thank you.
Shamira, can you give me an example on what situation will we use the consolidated method for account the investment in acquiring?
The example that I can give to you today is when A is acquire 50% ordinary shares or more from B, which means that A will be considered as their acquirer and B will be considered as their subsidiary or acquiree. Then, in order to make a consolidated financial statement, A as the acquirer need to console the groups by using acquisition method. I want to ask you on how to record associate and give me one example on how to account for associate.
For associate, we need to use the equity method. For example, company A acquire 40% of share in company B. Therefore, we use equity method because the share acquired is not more than 50%.